My name is John Myers. I'm the board chair of Impact Capital Forum, and it's a pleasure to have you here. This is, believe it or not, our 9th webinar in this series, which started after the pandemic or COVID events that brought us into the online formats. Today, we're pleased that Carolyn Allwin has convened a group of experts on water-related risks. It's very timely and topical, especially with view to the impact that climate is having, and we'll be learning more about some of those other issues associated to water risks. But before we go in, I just want to share a very brief overview of Impact Capital Forum. It was founded some 15 years ago, initially as the Microfinance Club of New York. We've grown and evolved as the sector has grown largely into more impact focused. And looking at investing modalities, the growth of social enterprises, and an emergence around new ways to promote and attract capital to causes that are sustainable and sustainably oriented. We have several more programs coming up in the next month or so. One of them next week on refugee finance, innovative models to support refugee communities, as well as tap the resources of part of the more permanent. Another program we're developing is focused on agricultural finance, and then third, we're launching an initiative in response to the around Black Lives Matter movements more globally. But we can share more about those programs with you as we continue work. But for now, I turn it over to Carolyn Allwin to guide the discussion around the water related. Thank you, Carolyn.
Thank you, John. We just wanted to take this opportunity to discuss water. I learned so much from Robin, and so that was the genesis of this event at Ceres. And so we were hoping to share all of our knowledge and information on water and how to activate more investors as well as organizations. So due to the opportunity that we've had with COVID, we have been able to recruit these esteemed speakers from Boston and from India. So we've been very privileged to have this opportunity. Otherwise, if we were traditionally with our live events, it'd be a bit more challenging to have Vedika from India and even Matt and Robin from Boston. So I'll just quickly do a brief introduction of the speakers and then continue to let themselves introduce themselves. We have got Vedika Bhandarkar, who's the Chief Impact Officer of water.org. Vedika champions water.org's strategy, growth, and water and sanitation program globally. She has more than 25 years of experience building teams and businesses within Indian and international financial institutions. Prior to joining water.org, she served as Vice Chairman and Managing Director at Credit Suisse, India, and previously she served as Managing Director and Head of Investment Banking at JP Morgan. We've got Robin Miller, who is a Manager of Investor Engagement at Water at Ceres. Ceres is a sustainability nonprofit organization working with influential investors and companies to drive solutions throughout the economy. Through powerful networks and advocacy, Ceres tackles the world's greatest sustainability challenges, including climate change, water scarcity, pollution, and inequitable workplaces. And last but not least, we've got Matthew Sheldon, the Senior Portfolio Manager on Natural Resources Equity Team at KBI Global Investors. Matt is responsible for the development of investment strategy as well as the day-to-day management of the water strategy at KBI. He has extensive specialist knowledge and experience in investing in the water sector, including both global public listed equities and private equity. Prior to joining the firm, Matt worked at Water Asset Management, where he was an investment analyst at Wedge Capital Management as an equity analyst. So thank you so much. We've the world's greatest specialist thinking about water and companies and ESG strategies. So we'll just start out with sort of laying the framework and landscape here as to, can you help educate us and our constituency as to what are the world's greatest challenges to water that you all think about from your perspective? We can start with Vedika, then Robin, then Matt.
Sure. Thanks, Caroline. And it's a pleasure to be here. And I agree with you, the virtual world that we live in is making all of these meetings possible. Let me lay out 3 or 4 of the way we look at water-related challenges, right? So first, I would say, I would like to make 3 or 4 points. First is water is a top 5 risk that faces the society, the world that we live in today, and certainly the companies and the investors in general. So I believe the World Economic Forum in 2019 ranked water as the number 4 risk. So much higher than the risk, for example, of cyber attacks or man-made natural disasters. Second, water already the water situation affects billions of people, right? So to just give some statistics, 2 billion out of the 7.5 billion in the world today, so 27% of the people already live in water-stressed regions. And if nothing changes by 2030, this gap is expected to increase to 40%. Third, I wanted to talk a little bit about access to water. So today, 1 in 9 people, or close to 800 million people, lack access to safe water. Almost 150 million people depend on surface water to meet their basic needs. And as you can imagine, climate change, which we are experiencing, enhances the uncertainty around water. So I talked about 800 million people lacking access to safe water. This number will increase, or is expected to increase, to more than 5 billion people who will lack sufficient access to water at least a month per year because of the climate change. And hence, I mean, the situation with water, the crisis around water is already, as I said, not just impacting communities, it's also impacting the corporates in terms of their financial performance, as well as, and hence the investors. And then the last point I wanted to make specifically around access, if you look at the amount of funding which is needed, right? And World Bank estimated this a few years ago, and they said just to meet the 2 goals of SDG 6.1 and 6.2, which relate to access to safe water and sanitation for everyone in the world, the amount of funding needed per year from 2016 to 2030 is roughly $115 billion per year. The amount of money which is spent by the world today is only about 1/3 of it, leaving a huge gap of roughly 85 billion per year. And so I think that becomes really important when we are speaking to this group of investors, because that sort of puts some big numbers in context in terms of the opportunity as well as the funding gap. Thank you.
I can go next, yes. Thank you, Vedika, for really illustrating what the data are showing around some of the grave challenges that we're seeing around water. So from Ceres and where we stand, one of the main messages that we emphasize is that for all the reasons Vedika outlined, water really is a systemic risk. The water is this unique resource. It underpins so many drivers of our economic growth, including food production, energy generation, industrial activities, human health and well-being, and what we're seeing now, political stability. But we often see water that as important a resource as it is, it's chronically mismanaged in a lot of the world. And we're seeing the acceleration of physical impacts of climate change that are making water supplies increasingly more unstable. So where we sit from Ceres, and we'll talk a bit more about this through the webinar, we see that financial institutions that have exposure to some of the large industries and global regions in the world do face these systemic risks from water. One of the resources that we have in a toolkit analyzes the 4 major indices, the S&P 500, Russell 3000, MSCI World, and MSCI Emerging Markets, on their main industries, and we found that a majority of these industries face medium to high water risk. So for those investors who are exposed to those markets, we see that those risks really do compound
in their investments. And so those are some of the challenges we see, and I'll turn it to Matt, who's actually one of the investors working through some of these challenges, to explain a bit more of his perspective from where he sits.
Yeah, we generally think of it, the problems I think are increasingly known. They're in the newspaper quite often. So we think of it in the context of what are the solutions, so the problems are the opposite side of the solutions. And so when we look for companies to invest in terms of solutions, we're looking for companies that can increase supply and access to water, decrease demand and waste of water, improve and assure the quality of water, and build and fix the infrastructure. So that really kind of sets out the opportunity set to solve the global water problems. I mean, the good news is when you solve water, you solve a lot more than just water. You solve issues around poverty, hunger, health, the sustainability of cities. In certain geographies, you're addressing issues of gender equality and education. So when you tackle water, you're actually tackling a much broader scope of solving global problems.
So now that we've laid the landscape for all the great problems that we have in the world related to water, perhaps we can share from what positions your organizations and you're coming at to help provide solutions and mitigate some of these problems. It may be Vedika and Robin and Matt, again, would be a great.
Sure, thanks, Carolyn. So I work for this organization called water.org, and I'm representing them here. So water.org, we are a global not-for-profit. We are exclusively focused on access to water and sanitation for those living in poverty. And we're doing this through catalyzing affordable financing to those in need. So to give you again some numbers, we currently work in 13 countries across Asia, Africa, and Latin America. We work with close to 150 partners. Most of them are financial institutions. Some of them are water utilities. And our financial institution partners, by working with them, we've been able to catalyze these institutions, deploying almost $2.3 billion in loan capital by making 6.5 million small loans and helping more than 29 million people across these 13 countries get access to safe water and or sanitation. I would also like to quickly talk about a sister organization of ours, which is called Water Equity. Water Equity is an asset manager, it's an impact investor, which also has the same lens of people living in poverty and is providing capital, currently only debt capital, to both financial institutions as well as enterprises who are reaching people living in poverty with access to safe water and sanitation. Water Equity currently has about $60 million of assets under management and is in the process of raising a new fund of $150 million where they expect to announce the first close later this year. And Caroline, happy to talk about the approaches of both a little later during the webinar. Over to you, Robin.
Thanks, and congratulations on all the good work both on the water.org side as well as Water Equity. We at Ceres have been closely following those developments, and it's great to see more types of products at different levels available. But from the Ceres perspective, as Carolyn mentioned at the top of the webinar, Ceres is a sustainability nonprofit advocacy organization. We work with influential institutional investors and companies from around the world on a host of sustainability challenges, including water risk, both scarcity and pollution, the climate crisis, and deforestation. So to give a little bit more context on our water work, Ceres has been addressing water issues for the past decade in a number of ways, and specific maybe to those of you in this webinar, we've been working with institutional investors for the last 5. This is mainly through a working group that we formed called the Investor Water Hub. It grew from a few dozen investors in 2015, and we now have over 120 institutional investors, which we're glad to have Matt and KBI a part, both as members, and Matt sits on an advisory committee that we have that helps guide the work. And the investors in this group are all interested in some form to dive into the ways that water risks and opportunities and solutions play a role in their investment decisions. So in collaboration with the Investor Water Hub, I think you all have on your screen, Carolyn sharing a toolkit that we co-created. And this we see, this was launched in late 2017, and we continue to improve it. But what it really has is a comprehensive set of resources for investors to evaluate and act on water risks in their portfolios. What you're seeing now are the various chapters that we have. And we understand in our, I think a bit of our philosophy here is that investors are all on a type of journey. Some of you may be hearing about water risk for the first time and need to really understand what are some of the drivers of water risk. As Matt mentioned too, once you address water, you address so many other aspects around sustainability, human health, ecosystems, that there's a lot of benefits to looking at water. But then we also outline for those investors who maybe are jumping into this a little bit more, we have how to establish priorities, how to make an investment policy statement that explicitly calls out water, as well as thinking about things specific to engagement. So how to embed water into proxy voting guidelines or to join a collaborative engagement program. And then we have, for those of you who might be in specific asset classes, we have some sections around public equities, private equity, alternative assets, and fixed income. So you can dive into some of those specific sections. And then the thing I would also like to highlight before I turn it to Matt is we have a number of case studies. And these are examples from investors themselves on some of the methods. So Carolyn, if you press that little plus button, the green plus button to the, yes. And you can scroll down a little bit, you can see we have about a dozen case studies from all different types of investors sharing what they're learning, what they're improving upon. And we've just added some additional case studies on fixed income in the past year. So really great resources, and I encourage you all who might be interested in diving in a bit more to check out the toolkit. There is a quiz that pops up that can help you dial into the specific section that you might be best to start with. And I'm always happy to be a resource there. So I'll also send I'll send a note, a link to this in the chat for you all to check out later. But I think with that, that's really one of the main ways that we're responding to this is forming this investor working group and continuing to share these resources with the Investor Water Toolkit.
Great. So I work at KBI Global Investors. We are a global equity investment firm based out of Ireland. We are majority owned by Amundi, which is a very large European asset manager. So I work in our sustainable natural resources team, specifically on the water strategy with a couple other folks. And we invest in companies that are providing solutions to global water problems. Global equities, plain vanilla, as kind of bread and butter as the investment industry comes. They tend to be smaller, mid-cap in nature. And so as specialists, we focus only on those companies in the water industry globally.
Great, thank you, Matt, Robin, and Vedika. So if we could just dig a little bit deeper, Matt's perhaps, given his track record here, although past performance doesn't necessarily indicate future results, the greatest alpha creator in water strategy is here. So if you could just tell us, Matt, how do your investors think about, are they coming at water with the alpha creation intent, or is it a risk mitigator, or is it impact driven? And if you could share some thoughts on that. And it seems like a lot of your investors are European, which I didn't have an appreciation for before. So is there a difference between US and European appetite for water investments?
Yeah, and most of the water funds, water strategies were actually started in Europe. In fact, most still reside in Europe. Our investors are global now, so it's not just European investors. We did a survey about 2 or 3 years ago where we asked our existing investors why they ended up in water and what bucket are they putting it in from an asset class perspective. And at the time, about 75% of our investors in the strategy were investing because of the alpha proposition. So the thematic multi-decade tailwinds, hoping it outperforms over time. And that's really what brought them there. What was interesting at the time is about 75% of our active conversations with prospects was the opposite, much more oriented around sustainability, impact, ESG integration. And I think that's continued to this day. I mean, those are very interlinked. You know, most people are not expecting a negative alpha when they invest in a global equity, publicly traded equity product. Yeah, there's definitely a big drive behind ESG. I would say geographically, there's a different perspective in general. To overgeneralize, the Europeans care a little bit more about ESG and impact than what we've seen in the US, although we're starting to see that change.
Great, and I guess to the extent that you can share, what's your secret sauce? What sort of ESG factors do you lack? Are you looking at materiality only, or whatever you can share to?
Well, I mean, the good news, and look, equity investing is hard, okay? And so the good news is water companies are good companies. The water industry is a good industry. And when I say it's a good industry, what I really mean is that more money needs to be spent over time to grow due to urbanization and industrialization and changing demographics. And there's a huge component, more than half is related to fixing what breaks, and it's breaking more often. So you have a very nice tailwind of infrastructure spend. You also have issues, whether it's climate change related issues, resiliency within the city related issues, supply and demand problems, waste, and those are increasingly addressable. And there's new issues popping up associated with affordability, associated with experienced labor, and our publicly traded companies are providing solutions there too. So the real premise is you have a multi-decade tailwind associated with growing demand, constrained supply, more policy and regulations, and more stuff that needs to be built and fixed. The secret sauce, it's tough to say. I mean, there's no secret sauce really, but we do integrate ESG directly into our valuations. We care that the boards are representing the interests of minority shareholders, and that's a direct input. And we care that our companies are providing sustainable solutions to advance environmental and social goals. And so we score each company on those two metrics.
And how do you feel about the data that you're relying upon?
It's spotty, and sometimes the data that's there doesn't mean anything to me. You know, so right now we're in the middle of a project related to the EU taxonomy work, where they're using metrics. I've been in the water industry now for almost 15 years, and they're using water leakage metrics that I've never even heard about. And actually, my companies in many cases haven't heard about them either. So we're still kind of working through the data sources, the most material metrics, in order to incorporate that into how we integrate that into our valuation work. So I would say it's very early. It's very early to get the measurements and make sure you know how to use them in a productive way.
And if you'll permit me, I'm just going to go off script for a second. Our last webinar was on ESG and the volatility, or the lesson volatility was in ESG names or portfolio. So how have you seen the coronavirus correlate or not correlate to what you're seeing in the water companies?
That's a great question. Actually, I keep on seeing all these data points that ESG stocks and funds are outperforming. We're actually struggling, but actually the fundamentals are fine. So I think a big part of ESG and impact investing is really associated with growth investing on the technology side. And if you look at the holdings, they tend to be the holdings in the NASDAQ or healthcare stocks. And so I don't know at this point whether you can associate volatility with ESG or not. From a fundamental, from an earnings perspective, are the companies doing what we would think they would have done in this scenario? They're actually doing better than we would have expected. Just this is our portfolio, so this isn't specific to the water industry as a whole, but our earnings are going to be down only about 10% this year, which is half, maybe less than half than the global equity markets. So we're delighted with that. And And is that because of them providing solutions to problems? Yeah, maybe to some extent. I mean, we were all talking about the word essential back in February, March, and early April. And what's more essential than water and making sure water systems work and are producing water in good quality? So, most of my companies had very few, if any, shutdowns and were operational quite soon thereafter.
Thank you. And I guess we'll punt the tougher question here to Robin. So if you could share some case studies or even names of leaders in the water industry that we can showcase and that are really doing best practices.
Yeah, it's a good question. I think, we often focus a lot on the laggards at Ceres, but we can turn to some of the early companies that have joined the Water Resilience Coalition, which I know Vedika can talk probably a bit more to some of the specific goals. But this is a pledge that allows forward-looking companies to embed water as a strategy in their core decision making. In terms of calling out a few companies, we have worked and note the progress of Levi, who have announced a strategy they call Water Less, and there's a little less than symbol in there, where they're working really collaboratively with their suppliers in multiple tiers to incentivize them and build capacity on their water efficiency as well as their water quality goals. And so that's certainly one company that we're looking to. I would look to this Water Resilience Coalition as a list of players. And I think we're also seeing some commitments coming out from the tech space. So, as Matt shared, it's something that we look at. Intel recently announced a commitment to a net positive water impact. And I think we're still unpacking what does that actually mean, because the data are still not consistent and comparable across the board, but we're glad to see some of these early commitments coming out from a variety of sectors. And I can certainly talk to some of the laggards in the food and beverage space at another point.
Yeah, Vedika, and I guess I welcome Matt too to share some examples of what sort of practices the best practices are.
Yeah, and thanks, Robin. And I'll be happy to talk about the Water Resilience Coalition maybe a little later, but I thought I'll just give a couple of examples. So we've been very fortunate to have had the pleasure of working and partnering with a lot of companies who have been early movers almost on this area in terms of water. And one particular one I thought I might use as an example is a partnership with Target. So we started this partnership in 2018. And the partnership was really focused on two things. One was in terms of helping ensure access to affordable water and sanitation infrastructure to people living in poverty in India. But also at the same time, while ensuring access, it was also to positively influence the watershed health within certain high stress river basins in India. And I think within 2 years, the outcome was more than 430,000 people got access to safe water and sanitation. But also in terms of recurring benefit, and this is to Matt's point a little bit in terms of data, I think Target, we're also very happy to report that there's a recurring volumetric water benefit of almost 800 million liters of water across 6 states in India. And so, that's how they looked at the impact. So it was both in terms of ensuring access, but also a recurring benefit in terms of the watershed health. And they were able to communicate this message across a variety of stakeholders. So whether it was their employees, whether it was shareholders in terms of ESG, to their consumers, as well as to the local communities where Target and their suppliers work in India. And there's several such examples, including with Adobe. And increasingly, we are seeing that companies are not only looking at impact in terms of people reach, but they're also looking at impact in terms of recurring, volumetric water benefit analysis, which we think is a very interesting way of looking at and a very concrete and data focused way of looking at access over time.
Yeah, most of the best performers globally, well, kind of originally, if you go back a decade, the real leaders were in the consumer staples, the consumer goods, because it was related to both their brand and then the social pressure in the cities, the towns, the rural villages that they're operating in order to have a social license to operate. And if you look at it, it's not that complicated. You need to reduce your water footprint and you need to improve the quality of the effluent. Okay, so generally the best operators are putting in some type of a water reuse system where they require less water up front. They treat it, reuse it within their system, and then they have a lower amount of effluent and better quality effluent. And so that's a variety of technologies, from membranes to various types of bioreactors. So that's what most of the leaders are doing.
And Robin and Vedika, I know you think a lot about how do we improve the laggards. So who are these laggards and what are they doing wrong and what can they do to be improved, and what initiatives are you engaging in to help improve the laggards?
Robin,
I can take
would
a
you like
first pass.
to go first? Yeah.
Yeah, absolutely. So at Ceres, we have done quite a bit of work on the food and beverage sector, specifically in the United States. And we have a benchmark that we have done every 2 years that we call Feeding Ourselves Thirsty. And this looks at the top 40 food and beverage companies. It ranks and rates them on their public disclosure of water risk management. So, I mean, even just in that, some of the ways that we can help improve and the ways that investors can play a role are asking for better disclosure. Disclosure obviously is only one mechanism to get at what is happening at the company, but it is a mechanism that investors have a lot of leverage to ask for, specifically through channels in shareholder proposals or in direct dialogue with companies. So we have been doing this, ranking and rating, and we're seeing that even just doing this benchmark, we see some improvement in the scores over the past 3 iterations of this benchmark, but still the average score among the 40 companies from 0, the lowest, to 100, the highest, is 38. So there's a lot of improvements that we can see. And I think there's a bit of a both and approach. We can elevate and share the leadership examples that we have, but we also then share the data on the lagging companies. There's two stories from this past proxy season that are interesting to focus on some of the laggards. One is with Sanderson Farms, who received a 0.5 on our benchmark. So there were a few investors who filed a shareholder resolution asking the company to disclose its water management practices, and the company actually responded with a commitment to disclose along the SASB framework, the Sustainability Accounting Standards Board, which is actually more than what the initial resolution asked for. So that was a really good case of investors using water as one lever, but then, as Matt said, when you address water, you're addressing and pinpointing issues that might be pervasive across the country or across the company. So that was one really great story, and we're excited to follow the progress of Sanderson Farms as it continues on this journey to improve its water management practices. And then another case is with Pilgrim's Pride, which has an interesting governance structure and ownership as it's owned through JBS and all these other relationships. But we saw that of the independent votes on the shareholder resolution that was filed, that was very similar to the one filed at Sanderson Farms, 71% of those independent votes voted in favor for the resolution. So, we're excited to see that that's a signal that for those investors who are not part of the majority ownership, they care about these issues and they want to see the company embedding water risk management into its practices. So we're seeing some of those wins. Another collaborative engagement, maybe to highlight, is one called the Global Investor Engagement
for meat sourcing, and this is collaborative between Ceres and FAIR, an organization out of the UK that stands for Farm Animal Investment Risk and Return. And this engagement has worked with top fast food companies to work with them on better disclosure and management of climate and water risks in their animal protein or meat and dairy supply chains. This has been an ongoing engagement for the past 2 years, and we're seeing several companies through some of this dialogue make some strong commitments around the science-based targets work as well. So that has multiple benefits for water, for climate. So we do see that investors working collaboratively with their portfolio companies can affect what we hope will be positive water outcomes in the future.
Vedika?
Yeah, thanks. I would like to really talk about, what are some of the things the more progressive companies are doing. And I think both Matt and Robin have talked about this, but I wanted to specifically talk about the Water Resilience Coalition, which we've been very fortunate to be associated with from the beginning. So it's a group of some of the largest companies, including consumer companies, as Matt mentioned, some of the tech companies, who've got together and are really looking at it in a very, what can be and what should be done in the next several years. And they've set themselves some very clear, 3 really clear goals. So the first one is in terms of net positive impact on stress water basins, in terms of availability, quality, and accessibility. And this goal of achieving net positive water impact is by 2050, and at least going halfway through in that journey by 2030. So that's the first goal. The second goal is in terms of both developing, implementing, and enabling strategies for supporting a water resilient value chain, which is in terms of supply chain, backward integration, forward integration. And the third objective is, taking on a global leadership position in terms of both public and corporate outreach. So bringing more corporates into this coalition, but also communicating the importance of this much more generally across the public. And we're very excited about this, the specificity of the goals, as well as the nature of the companies which have joined this coalition. And we expect that this group will continue to grow and expand with, as I said, some very clear targets over the next few years.
Thank you. We're just about to move into a conversation on who the investors are and whether there's any interesting blended finance structures and sort of the future of water. But I did want to pause briefly because we do have this question from Thomas Bush, and this is just a reminder to everyone in the audience that do feel free to post questions in the Q&A. There will also be an opportunity to network with the speakers after this event if you have specific questions for any of them or would like to engage in questions about future partnerships and so forth. But this question from Thomas, I think, is really for Matt. So the question is, how has the global interest rate environment affected your portfolio companies' access to capital, cost of capital? Do you expect this to be a tailwind for the sector moving forward? Do you see any regulatory risks with water utilities, particularly in the US? So if you could look into your crystal ball and...
Yeah, so I would say access to capital is not the problem. So whether they're municipalities or corporates, low interest rate environment, there's a lot of money flowing around. There's a lot of projects. It's usually, and it's not a technology problem either. Really, the biggest problem is a matter of, it's a commitment issue. It's a political will to actually solve the problem versus putting it into something which is a little bit more visible. So we expect the low interest rate environment to be supportive. It has been supportive. A lot of money has found projects over the last 5 years to really make a difference from an infrastructure and technology perspective. There's always regulatory risks with water utilities around the world. They're an easy target if there's supply issues. There's affordability issues, and the systems do break, and they're breaking more often. So The regulators do get involved. If you're tying those two questions together, interest rate risk and regulatory risks, they're integrated because the profits are a function of allowed return on equity, which is a function of interest rates. And so, yes, if interest rates go up, that does increase. Well, sorry, if the interest rates go down, it decreases the profitability of the regulated utilities. I would say it's a soft risk, and the vice versa is true as well. If interest rates go up, there's going to be a higher allowed return on equity for utilities. But then you have to think of it from the other perspective, which is in a rising interest rate environment, you might have less regulatory risk, but you would have more equity risk associated with investors going to non-bond proxies. So I hope that answers your question.
Caroline, may I speak about another risk which is facing the utilities in the emerging markets right now because of COVID, in the COVID environment? So one of the things which we're hearing from our utility partners, and as I said, we work with utilities in Southeast Asia currently, but we're also speaking with them across Africa, for example, and Latin America. And one of the things directly related to COVID that we're hearing from them is, as you probably know, governments across the world have basically told utilities that they should not disconnect any consumer, even if the consumer is unable to pay today because of the COVID-related economic aftershocks, which absolutely makes sense, right? Because COVID's shown us that access to water is even more important in terms of increasing resilience. But that the more time this continues, we think it will start having an impact on the financial health of the utilities. Obviously, if a large number of their consumers are unable to pay for their water connections, and hence what impact does it have in terms of their ability to spend on their infrastructure, in terms of rebuilding or repairing the infrastructure, or even expanding the infrastructure. We think that is going to be a moot point, which is going to play out in the next few months and years. And the role of the governments and the regulators in this context is going to be very, very important. Sorry,
Carolyn, I see.
We're unable to hear you.
Apologies. So we just have a few minutes left before we're going to break to our breakout. So if we want to wrap these questions up, like, are there any interesting blended other capital coming from? I know we talked, Matt, about your European LPs or your European investors. Robin and Vedika, do you see sort of, I know, Vedika, you mentioned some interesting fixed income products. Like, are there different sort of interesting investors that we can further recruit to think about this space?
Sure. So I'll be really quick. So I think, we're looking at three types of capital. One, the easiest one, which is probably not interesting to this audience at all, is the philanthropic capital, right? It is catalytic, and today when we look at $1 of philanthropy, it's able to generate almost 70 times leverage in terms of the capital which is deployed by our local financial partners. So it is quite an interesting way to look at the returns. But there are two other examples I wanted to give. One was in terms of partially returnable capital, right? So how can we have more local financial institutions deploy capital towards this sector? And sometimes you need, what is stopping them is the perception of risk. And so you probably need guarantees. So, if an investor is looking at deploying capital in the form of guarantees, which is partially returnable capital, that's another interesting way of looking at it. And finally, it's just pure investment, right? So I talked about water equity, and water equity in its fund, which it's looking to raise right now, is indicating to its investors about 8% return in dollar terms on its fund. So that would be another way of looking at capital.
Yeah, and just adding some work that Ceres has been following around, I think there's more and more fixed income investments that we're seeing that have a water-related orientation. Some of this comes from a trend that we see towards what we call nature-based solutions. And there's new products coming out in the bond space that are hybrid projects. So a mix of gray and green infrastructure, which can have a lot of climate change benefits as well, because those types of projects are much more resilient and adaptable versus just a strictly, gray built infrastructure project when the projects incorporate natural wetlands restoration or working with the existing land. So there's been some issuance we've seen in Washington, D.C., Atlanta. I know there's some areas in the Midwest that are considering issuance. So I think that's something that we can, have our eye on and that we're seeing come into the space. It is also interesting to think about some things that might be other projects that have water benefits. So there's a lot of agricultural technologies that are coming out that actually have soil health benefits that then require a lower need to put in fertilizer implements, so you have less nitrogen and phosphorus running off. So there's interesting to think about. It doesn't necessarily have to be specific to water to have a water-related benefit to it.
Matt, how do we get investors excited about? Have you seen increase in sustainable investors come in, or institutional investors with water and then mandate? Obviously, the recent Department of Labor guidance isn't super helpful for institutional investors, but I guess how do we communicate the successes and what you all are doing in water to help recruit more capital towards this?
It's a good question. I think probably the biggest message or biggest misconception about public equity water investing is it's very narrow because it's water. And so we spend a lot of time communicating that it's niche. There's no doubt that it's niche, but it's not narrow. Water touches so many parts of the global economy. It's a very diversified portfolio, lots of different drivers, lots of different geographies, different regulatory environments. And so probably the biggest message is if anybody lets us in the door, we're just happy to talk about what it even means. We're not buying water low and selling water high. Okay, that we're investing in companies that are genuinely addressing water problems and really just telling that story. We've been doing it for 20 years. So the strategy was started in 2000. And so just showing them the track record and how it does in different market environments is a very helpful setup.
Great, thank you. So just in closing, if we could just all share some closing thoughts, what initiatives can we work towards in the future? What can we, if there's a call to action that we can put out to those participants on the call, what could we do to get more involved and activate ourselves?
I'm happy to go
start
first,
with Vedika,
Carolyn.
maybe, and Robin.
Yeah, so first of all, I wanted to say to both Matt and Robin, when you were talking about the all-pervasive nature of water, I really thought I was speaking to a couple of my water.org colleagues. So this is just music to our ears. And we really think about water exactly the same way, right? It impacts so many other parts or sectors. It impacts health, it impacts poverty, it impacts gender inclusion, it impacts education, and in times like what we're facing right now, it's certainly very clear that access to safe water increases the resilience of the communities and of the world. Say, don't be scared of water. It's not a difficult sector. There are ways of blending capital and making transactions financeable, bankable, attractive from an investor point of view. And as I think Matt said it much better than I could, which is there are certainly ways of generating good returns at the same time creating a huge impact. Thank you.
Maybe I'll just jump in. I think it's great to have water.org on this call for impact investors who are listening. the world of water investing is diverse, okay? But when people are trying to think about allocating capital, putting their money where their values are, you get different things with companies such as, or organizations such as water.org or water equity versus publicly traded. Issues around additionality, intentionality, measurability, they're much more so on the private equity side and the community based. It's fair, you're in the ground there. But issues such as scale and liquidity and track record, and just the ability to put capital to work, you benefits on the public side. And so we did a survey a couple of years ago, and it turns among impact investors, it was pretty comprehensive, and we were surprised. Most impact investors, while they may naturally think of the private equity side first, most of them have a blend of the two. And so one of the things that we've seen over the last couple of years is more impact investors blending the two approaches, because you get different things when you do that. You lose a little bit of one thing and gain another bit of something else, but together you're actually achieving the impact. You know, you're actually accomplishing what you're hoping to accomplish.
Yeah, and I think those sentiments are really great to close with. We see water; it's a complex topic, but I think as Matt and Vedika have shared, it's that's what makes it interesting, and that's something that I encourage all of you to continue learning. As far as my call to action, we have a lot of resources at Ceres that are for public consumption and that we want you all to be using and embedding into your own decision making. And so I encourage you to check out the Investor Water Toolkit. If you're interested in learning more about our working group, the Investor Water Hub, and want to join Matt and other like-minded investors, please feel free to reach out. And where we're next with Ceres is we've just launched this task force on valuing water. And it's part of a broader scope of work that we hope to build more of a global investor initiative on water broadly. So I think it will encompass, all the work that Matt and his team are doing. And we hope to closely work with the innovative strategies that Vedika and water.org and water equity are bringing together and really elevate the role that water has in our decision making. So always, glad to continue the conversation, and we certainly have a few resources that we hope you all will take with you when you go from this webinar.
Great, thank you so much for this wonderful conversation. We were so privileged and esteemed and humbled to have these experts in water from all over the world. So hopefully you all will join us in the breakout session to further pick their brains about all that we can do to help further the water agenda. And for closing thoughts, John Myers.
No, thank you, Carolyn, and thank you, Vedika, Robin, and Matt for a very thoughtful and illuminating discussion on water, the issues associated with investing, ESG, impact investing, and then the general good or the public good that water is. And that's, I think, as we typically do, we send around a list of resources that the panelists have referenced, which we can do to you after, within the next couple of days after the webinar. But we, as Carolyn mentioned, we invite you to join the meeting session afterwards, which there's the dial-in information or the call-in information just in the chat box area. But again, thank you everyone, and keep posted for our upcoming events in the coming weeks. Thank you.